the sun down, but imagine being this young, handsome, successful, rich that I mentioned, successful, right? It's tough. Welcome back, everybody. Another incredible live trading stream. Panic sellers have entered the stock market. Now, I might be the last person saying this, and I know I repeated this on Sunday, and I said this yesterday on the live streams. Regardless of the panic selling that we're going to inevitably see, because until the situation in the Middle East officially calms down, everyone knows the different positions. The US has no intention of escalating the war or supporting Israel in a head-to-head military conflict. And Iran has no intention of escalating, right? They retaliated for the bombing of the embassy, and they're like, all right, that's it. We're even. Israel's the only person saying, oh, you thought we were even. We're going to get back at you. And so now the whole world is trying to see whether the US is going to support Israel in its direct military efforts, or if the US is going to grow some balls and tell Israel that we're not going to step in if they want to get in a fight with every person at the bar just because we're the bigger friend. I don't feel like doing that today, right? My family don't feel like dealing with that. Don't No one wants to bail me out of jail. Like no one wants this escalation of the conflict. And so I think that by the end of the week, we'll have a full recovery in stocks once the world realizes that World War III is not on the table. And if you guys need a reference point for this, refer back to when Ukraine and Russia first got in their conflict. The reason we had a massive sell-off, everyone was thinking, is because, well, I mean, they were rightfully so. World War III fears were definitely on the table. You got the largest nuclear superpower in the world, Russia, going head to head with NATO. Well, not really NATO, it's with Ukraine, but they're trying to put Ukraine in NATO. And so it almost became a World War III situation. I think a month and a half later, once they realized the entire conflict was going to be contained within those two borders, there was no chance of Ukraine joining NATO in the middle of the conflict. That's when stocks recovered dramatically. So we have a reference point for what happens when markets think it's World War III. We get a sell-off. And we know exactly what happens when the markets realize it's not World War III. Massive recovery. Easy bet. Put a one in the chat if this is pretty straightforward to follow. All right. If you're like, Roy, that's so obvious. How come everybody else is not seeing that? God himself only knows. But I read Goldman Sachs's report this morning. Like they're just, I don't know if they're fear mongering or if they actually believe we're going into World War III. People, the World War III is the last one. It's the last soiree. Like if you guys think that we're gonna go into World War III off of a couple some missiles that missed their target, keep in mind when Iran retaliated, they did not hit any targets. They intentionally hit some empty space to try to create a giant show. 200 missiles got sent over. 99.9% of the missiles were deflected or were intercepted knowingly because Iran gave Israel a weak head start. Hey, we got to get y'all back for that, okay? Our people they're gonna eat us alive. This is the government of Iran or the Ayatollah, whoever's regime is calling. They're saying, look, if we don't retaliate against Israel, our people are gonna rebel in the streets. They're gonna call us cowards and they're gonna eat us alive. So we're gonna have to throw some missiles and send them back. And that's what I feel like happened. By the end of the week, I think we'll have that recovery. Retail sales smashed expectations yesterday. Now, if you were BlackRock, okay, you don't really care what's happening overseas. Let me put this as plainly as possible. The top five banks do not care about war. You guys understand? They have a money printing machine. Unless the conflict hits U.S. soil, it's a different story. But if you look at BlackRock, State Street, Vanguard, iShares, J.P. Morgan, the largest wealth managers in the country, they're going to make money on either side. If there's fear and panic, guess what we all still need? Toiletries, toothpaste, right? All that stuff is still going to sell. Johnson and Johnson stock will still do well. Certain cyclicals and certain, let's say, industrial stocks will still do well. Defense stocks will still do well. The only thing that might take a hit is the Magnificent Seven or the Magnificent Eight, because if you're going to be speculating on Tesla's price 10 years from now, and you're betting on the autonomous car revolution, okay, maybe you want to put that off a little bit while this war subsides, right? There's some immediate things that we're going to have to deal with before we speculate on innovative technologies 10 years out. And so tech stocks could take a hit in a wartime situation, but the largest asset managers know how to make money. What does the government do to raise money for war, right? They issue more bonds. And so who's going to buy a lot of these bonds? Probably BlackRock, right? Just lend money to the government. Once things recover, the government has to print money to pay BlackRock back. Everybody wins except for the taxpayer. And of course, all the innocent lives that are lost in war, right? Burhan, if you message one more spam in the chat, I'm going to have the moderators kick you out. All right? Don't do that. He says, please help me. Yeah, you already lost me, brother. All that begging shit will get you nothing. I'm such a dickhead. I was about to say the most dickhead thing. You know what? Because it rolled on the tip of my tongue, I'm gonna have to say it. But whatever you're going through, I hope it gets worse. God damn it, do not get on here and spamming people and begging people for help. All of us in our darkest moments, in our rock bottom moments, we're not out here begging folks for help. Is that true or not, guys? And because of that rock bottom, because it's really rock bottom when you don't have nothing left. If you still have people around you supporting you, it ain't rock bottom. Newsflash, right? But this is where character is built. Figure it out. Now, if you have a specific question, if there's something I can help you with specifically, if there's a piece of competence that you're missing that I could bridge the gap, then ask an intelligent question. But please help. But you better be getting chased by a mountain lion right now. The hash slinging slasher better be right behind you, typing like this. No one got the obscure cultural reference. Hash slinging slash, you uncultured. This is what sucks, man. I'm out here making funny ass jokes and going over people's heads. You guys hear that whistling sound? Yeah, that was the joke. Just completely flying right past like a F-15 fighter jet. Just completely missing the target. All right. Nobody? Still? Nothing? All right. What do I need? Fuck, I'm gonna order some coffee. That's what's gonna happen. This is what happens when I don't drink caffeine. Made it through the entire. Okay, so let's kind of get back to it. Panic selling ensued. Obviously, we saw price break through the daily zone. We're either going to get a recovery back inside the range today, or we're going to get a push down to 17,488, just like the Ferrari. 17,488. And so this is, from a visual perspective, this is exactly what I'm seeing. Full recovery to all-time highs. Entry 488 stops below this wick. But I also understand that price could come down to this level, hit the daily zone, and then make a full push. So I want to make sure I give this trade enough room. Now, because that's 250 points, what makes more sense is to have the stops right below the wick or maybe even closer, and then have two positions. Enter the first one and then the second one if it gets hit. Whenever you have two entry prices, one that's sitting at a probable zone and one that's a little bit lower, but going to give you the best risk and reward, there's two ways to play this. Well, there's three ways, but I'll stick to two. Enter the full position here, small contract size, wide stop loss, right? Give it room to breathe. It's going to go into drawdown, but then it'll recover and you'll make your money. Now, because there's so many specific rules with futures, you don't want to spend too much time in drawdown. There's trailing equity drawdowns and too many risks. What you could do is you can enter a position here, and then with a tighter stop loss, if it gets hit, and then you see price recover, you can enter again down here. Same risk, same size, and then you can make up the difference. Cool. There's a third way, which is scaling in. That's the way that I prefer, but that's for Chart Addicts members. I don't want you guys there on YouTube to hurt yourselves trying something like that. Don't hurt yourself. All right. VIP, you guys know, tester, full, maybe a re-entry if you're a savage on the way back in. Who knows, right? Who knows? Know your risk. That's all I'm going to say. We're going to do something very special today, which is I have the recording of the interview with TradingView. And the editing team is loafing so hard that I'm literally about to leak our own freaking interview at this point because I wanted to drop this shit 2 days ago and it's still not ready and I don't fucking know why. So I'm going to leak it today. All right. We're going to play about 10, 15 minutes of the interview, some of my favorite parts, and I'll let you guys hear it. I'm not going to let you guys watch. I'll just do the audio in the background. But Pierce from TradingView said some of the most insightful or gave some of the most insightful advice that I've heard so far. Number one, from the business development standpoint, gave me a lot of great advice for Chart Addicts FX Summit, because if you guys look at FX Summit and TradingView, we kind of occupy the same space. We're kind of in this third party space where we're not directly involved in financial services, but we're hosting financial service platforms to come in, take advantage of our kind of like our platform. TradingView gets all like the top 50 brokers and all these different companies to integrate onto their platform, and they're just a publisher or they're just like a third party. Same with the FX Summit. And so we don't own any of the companies, and we're not directly involved financially with any of the companies coming to the summit, but we give them an opportunity to connect directly with traders by hosting that sort of third-party environment. And so he gave us a ton of great advice on how to stay away from like the regulatory pressures and things like that. I owe Pierce a lot for that. But he also gave great trading advice. He gave advice for people in terms of the prop firms and his insight on the prop firm situation. And I think that's the part I'm going to play today, which is just like that 10-minute segment of him explaining what's happening with prop firms, where the world is likely to go from here, and what trading looks like the next 2-3 years, right? Pretty interesting stuff. Please talk about US30. Aliyu Bala, I'm going to tell you the same exact thing I told the other dude. Okay, I'm going to kick you off this chat. I'm going to give you one chance to apologize for acting like a child in the chat. If you don't, you're going to get kicked out. Cool? All right, let's go through trades. NASDAQ, very straightforward. If we do have a recovery back inside the range, I'll enter a trade back in. But more than likely, we have this second leg of the move. All right, keep in mind, I don't know, not even keep, I'm not, I almost just gave a huge piece of sauce. CA members, I'm writing this one down, so I make sure that we do this privately, maybe on a market outlook. I got a good piece of info here for you guys. Okay, it's nothing too, like, you guys already know the info, but this is going to put a little bit of context on it. Okay, any questions, comments, concerns so far? Any questions, comments, concerns? Did that dude, Aliyu Bala, still hasn't apologized? All right. Roy, do you have any TradingView discount codes? I think we do, right? It should be in the description. Instagram, early bird tickets, advanced coaching. I think I do. I don't know, we'll see. Oh, speaking of codes, yo, good reminder. We have a promo code today for the NAS100 masterclass for everybody who showed up to the live stream. So if you guys stick around for this, if you guys make it to the second half of the live streams, we'll make sure to give you guys that promo code, and get you guys that deal here. I'm trying to get the exact code for my team. I believe it was 30% off or something wild. Just a reminder, the NAS100 masterclass is April 24th. This might get moved by 4 days. So don't be one of those people that registers for the class and is like, well, you guys moved it for 4 days, and so my whole life got destroyed. And so I need you guys to, rock me to sleep. If the date is too sensitive for you, it's like is life or death, just hold off. That date might change by 3 or 4 days. If that 3 or 4 days is going to ruin your entire existence, please just hold off. All right. But the promo code will be applicable for 24 hours starting today. Okay. And if you guys want more information about the masterclass, clearly you can just come here and load up about 100 testimonial videos from real traders who have taken the class, get their perspective, how they rank the class versus other courses they've taken in the past, whether they thought it was helpful, how much money they've made from the class so far, whether they've been able to make their money back. Tons of examples here, so don't miss out on that. Go ahead and check that out. Do I find any trading opportunities today? Chart Addicts members, let me show you the bearish version of the model. Okay, we have a low, high of the range. Whoa, whoa, whoa. Ladies and gents, do you guys see what I'm seeing? Chart Addicts members, what am I seeing right now? All right, I'll give you a hint. I'll give you phase one. What do you guys see? Give me a few observations here. Nice. Pardon me while I get surgical here. Wow. Yo, Chart Addicts members, better either the chat box is broken or, well, actually, let me be patient. Let me be patient. Typing does take time. I gotta dial it back. Got a little too excited here. I had to answer the question for you guys because, you know, Josh, I don't know if you can see it. You might be able to like, there's a tear coming down my eye right now. It just hit my keyboard. My computer might just fucking break. James, 100%. And then Will, we don't know which type it is yet, brother. Because if we have, well, okay, you know what, Will, let me take that back. You're right. Because there's a little bit of guesswork that we're doing here, but we're gonna have to wait to see if it's type one or type two. Because if it's type two or if it's type one, excuse me, it's gonna blow right through and then recover. So this would be the trade. Now on the higher time frames, there's so much room to go that we do have to be mindful of not buying, let's not being premature with the buys. So I'm gonna wait for two things, which is ideally we get a breakthrough first and recover. If we don't get that breakthrough, then this is gonna be a scalp. Guys, if it does type two and starts to move, I'm not confident that this is gonna be the recovery, right? Perfect double bottom and recovery doesn't really sit well with me personally. Double bottom like this and recovery, that makes a lot of sense. Because you always have to think about what is the most likely thing that retail is doing. And because of that, what is the most likely thing for institutions to do? And so, in my mind, the easiest thing for retail to do is either have buys already sitting or buys sitting here, right? Because you guys know how retail goes, or sells as the market starts to crash right now, they enter sells inside the market. What would be the easiest way for market makers to ensure that there are no open orders left trailing along with the market? Well, it would be to break the highs first to kick out all the sell orders because there's probably a lot of stop losses that were sitting here from sellers. Okay. Sellers were probably selling retest right here. They got kicked out. Now the market is coming down and enticing buyers. And so it would make a lot of sense as a breakdown to kick out buyers and then the full recovery. Now, there's a lot of ifs and moving parts here. And so for me, it's just as simple as waiting for the market to make its way down to the bottom of my range. And if I see that rejection, I'll be entering here at the bottom of the range. Now, chart addicts members, I am going to go body to wick here. Okay, because we go body to wick for a reason. If we do body to wick, if we go body to wick, we already hit the zone. If I go smaller time frame body, we still got a little bit of ways to go. You see that? And so personally, I'm going to wait for that lower time frame. Okay, only because there's a lot of moving parts. There's a big risk that sellers take back over. So I'll be a bit more conservative, a bit more cautious, and wait for the second and better zone. Oh no. Reminder for everybody, if you want a booth at the FX Summit, you have about 2 weeks left before you're gonna have to go with the late fees, and nobody likes late fees. So if you guys have a trading community that you would love to see go, make sure you mention it in the group chat ASAP. That time is running out. If you have a specific big name, speaker, influencer, trader that you guys would like to see at the FX Summit, make sure to let them know that you'd like to see them there, and just make sure that they understand that time's running out. Sweep stop losses below Tokyo low. James, tears down my face. Okay. About to put a tester if this candle rejects TGIP. We're already on it. Exactly. Justice says, bro, how do you deal with blowing accounts? What do you do? Well, I haven't blown an account in a very long time. I'd have lost a few challenges, but I feel like that's different than blowing an account. I just don't blow the account. Okay, I've coached hundreds of traders, and I tell them the same thing every time. I'm like, what you should have done is come to us before you blew the account, because I could have helped you. Once it's blown, the only thing you can do is learn, reset, and get back in the game. It's that simple. If you do not learn the correct lessons from that blown account, you're gonna repeat the mistake. And when I say the right lesson, it means most traders have a problem of misdiagnosing what went wrong. And so they'll be like, oh, I knew I shouldn't have taken the second trade. But it wasn't the second trade. You were trading Euro CHF or some shit that you never traded before because somebody else sent you the markup. And instead of just sticking to your strategy, you decided to go do something else. And that's why you fucked up. But if you're going to blame, taking two trades in a day and now you're only going to be a one trade kind of guy, you misdiagnosed the entire thing and you're just going to be shooting yourself in the foot. So what I would say is take as much time as you need to learn exactly what went wrong. Because until you do that, you're just going to fund the next account and blow it again. And it's just going to get worse and worse because the more you build on top of let's say you have a hurt muscle, and the more that you build on top of that hurt muscle and never truly deal with it, it's never going to get fixed. And it's only going to get harder and harder to fix. Okay, so if you have blown an account, the easiest thing to do is take a step back, learn exactly what happened, and get back in the game as soon as possible. Don't overthink it. Don't sit there and be like, oh, how could this have happened? And get down on yourself and all that dumb shit. Just think about it like a basketball player missing a shot. Kobe misses a shot. You think it's going to be on national news? No. Newsflash, Kobe has the record most missed shots in NBA history. Isn't that crazy? Also has some of the most made shots in NBA history. Ain't that crazy? Take your shot, people. Don't cry over spilled milk. Made 500 AUD playing within the range. Sam, I'm proud of you. Do not give the money back. Okay? If I hear a story in the chats, you kept trading past that gain and then you continued to trade and gave the money back. But what do you think I'm going to say in the chats? You think I'm going to be a nice guy? You think I'm going to be a bit of a dickhead? I'm in already. Wick entry off the killer zone. I don't like it. I still think that there's more room to go. Plenty of room down here. If it shoots up, so be it. I'll wait for the retest, but I'm going to wait for that pullback. Sofa effects, good morning. I appreciate the support. GJ melted, but expecting some recovery. Seven-figure mission said, good morning, playa. Good morning to you too. Okay. We got beanie reaction. What type of stupid fucking question is that? God, yeah, there's definitely such thing as a stupid question. Like, what about anything I said in the past 20 or 30 minutes has anything to do with whether, like, there's no account up here for you to ask whether it's live or not. I haven't even taken a trade. This person just ignored all the value so that he could ask a question about the account. People ask a real question. The only other option is we have this interactive thing, or I have to do segments. She's like, all right, guys, we're gonna go through this segment. I'm gonna do new segments and all that fucking lame shit, right? I mean, it's up to you guys. Do you guys want to do some kind of segmented show kind of style? Because I'll do that and just kind of like do the pre-prep before and then and just go through the news events and whatnot. Or I could just go off the cuff like we always do. Some back and forth would be helpful. Now, if you guys don't have questions about fundamentals or about trading, I'm starting to think that you guys just aren't paying attention to what's happening around because I always have questions. I'm on Twitter and shit. I'll see the Bank of Japan doing something, and then I'll have a question and I'll just go ask Bob. I'm like, yo, Bob, is this gonna fucking crash markets or not? And he'll be like, nah, it's not. I just want to know. Now, if you have no curiosity at all, then I don't know. This is gonna be a very tough road for you. Trading and investing in markets, it's tough if you don't have curiosity because you have to like always find some shit out or learn some shit or something. When you just want to know how the world works so that you can make money, then you make a lot more money. So I've been here for about 230 streams, and every day I'm like, yo, let's see if we can get some good questions. And it's like, thoughts on gold? Thoughts on US30? Where's your stop loss? Well, wake the fuck up. You can ask that dumb shit on any stream. You can ask that dumb shit on fucking baby pips for fuck's sake. I have lots of questions, but you gatekeep it behind a paywall. I don't gatekeep all of it. You never know until you ask. There's some things that people paid hard-earned money for, information-wise, and this isn't one of your run-of-the-mill courses where we're just selling prepackaged bullshit. Like this strategy works guaranteed. So I can't give that away for free. That's just stupid. But everything else, I can answer. We need an 88.6 girls. We have an 88.6 girls. The 88.6 girls collection is alive. We have the 88.6 boys. Where's the 88.6 girls? 88.6 girls right here. Could be sexier. We got that hand stitched chart addicts on the side. Real quality. And it's only 50 bucks. Fam, come on. Quality. Quality is discreet. It's low key. I'm not a big fan of graphic t-shirts. I think graphic t-shirts are whack. Black is one of my favorite colors. So yeah, that's what we're doing. We have unisex hoodies, if I'm not mistaken. Got the 88.6 boy shirt. Love to see it. All right, this retest could have been it. Body to wick. We hit the zone. The price of being accurate, or the price of being too accurate. I still believe in the strategy. I believe, people. I believe in my system. What does 88.6 mean? Oh, God bless your heart. Yeah, I'm just not going to answer questions that are just asking me signals questions. Like where's gold going and all this stuff. After somebody said this was a signal stream, I started to realize that I'm just disrespecting myself for giving out this info. And the big reason why we haven't grown or why we don't get the respect that we deserve is because people are going to use the streams like they do with a gas station whore if we allow them to do so, which is you stop by, you take the trades, don't post it, don't say nothing, make money and walk away. No more. If you're going to ask a question like, where is US30 going? Yeah, I ain't going to tell you. It's that simple, y'all. Like people gotta, you gotta appreciate things before they're gone. Otherwise, they're gonna be gone. Let that be a lesson. You guys could have just posted on IG, could have supported the squad, could have showed some love, but no. So not gonna give out free signals or free trade ideas. CA members, though, if you guys want to ask me a specific question, I will send you the exact answer in the VIP chat here on Zoom. So just go ahead and type it up in the chat, and I'll literally give you the answer. No hesitation, no questions asked, just straight value. The lives won't be here forever. The lives might not be here tomorrow, my friend. That's why I keep trying to urge people to get into the master class. It's like, you guys know by my personality, I'm like, there's a lot of shit, there's a lot of moving parts on our side. Let's take the world tour, the FX summit, and everything in between. If you guys think that I'm just going to be here all the time, every day, you are out of your fucking mind. And if you're going to put your family's future in my hands and then not go and, learn the system for yourself, then that's just irresponsible and stupid, and your family deserves better. They deserve better than to have somebody stupid like you. Okay? So make the good decisions. If you think this is harsh, good. I don't know what game you guys think we're playing. I don't know if you guys think this is your practice run at life. If this is your like warm-up game, right? You guys know the lobby in the video games? Yeah, this is not that. You're in the fucking game right now. This is life or death. So if you guys think this is too harsh, yeah, imagine fucking waking up in 2 years realizing your life still sucks. Imagine how harsh that is. All right. So if you're being sensitive about it, then trading is not for you. If this is speaking to you and resonating with you because you understand how important your family's future is, congratulations. But just at least consider the masterclass. Now, we have can somebody in the Chart Addicts team, can you guys send me that event registration? We have a free class for what I would consider newer traders. I'm doing a free class from now on every Wednesday for new traders to introduce what the NASDAQ Masterclass is, share some of the success stories, and show you how this class could benefit you tremendously. Show up on Wednesdays. It's free to get more info on the class, and then you guys can make your choice from there. Deal? You show up to the 30 minutes on Wednesday. Doesn't seem like it's for you. Fine. Keep it moving, and best of luck with your trading. The transparency, the world is too soft. It is what it is. That's just the truth, guys. Do you think short-term scalping off the 5-second or 10-second chart can be profitable if done correctly? There's too many ifs. Can a retail trader effectively trade on the 5-second, 10-second chart? My answer is no, because the brokers that exist today do not allow that sort of activity. If you do, then you're going to have to use massive size in order to compensate for those short moves. And you're going to get hit with things like slippage, latency, commissions, some form of fees that the broker is going to charge you to compensate for you trying to game the system. The reason that 5-second and 10-second charts are effective is typically because of EAs. So like algorithmic trading, because they can take 1,000 trades a second. They can just, scalp in and out, in and out, in and out consistently all day to make money. And so EAs have a better chance of operating on those smaller time frames. For me, I believe that the high frequency trading firms have all the advantage on the smaller time frames. I want to go to where I have the advantage. It's like Jamal Hill trying to box with Alex Pereira. Don't compete with the juggernaut where they're the strongest. In case of markets, it's the algorithmic trading that is really, happening at the highest level, both institutionally and at the hedge fund level. Their advantage is the smaller time frames, specifically those second charts. And so I'm going to stick to everything 30-minute and above, and that's all I need to make money. Said Profit Book. Now, seriously, 886 is part of the NAS100 strategy. It works very well. Well, there it is. That's true. Hey, Roy, do you think we got the dip into the buy on US30? C4, take the masterclass. You can pick up pieces of the strategy from the live streams, but you won't fully understand until you take the class. No, I intentionally make things confusing because if you just try to take a few pieces just like the fib and just start drawing fibs from every low and high that you can find, you're going to blow your money in about a week and a half. All right. The strategy is so simple that all you have to do is just learn it from start to finish. If you're going to try to cheat the game, then I'm going to intentionally fuck your life up on these streams from now on. Except for the people, like there's hundreds of people that have taken the class, y'all, and they're all in these live streams. And they're not falling for any of this stuff. They're probably listening to this shit on mute at this point. Well, you guys probably have good taste, so you're probably geeking your ass off at work listening to me be funny. But they know exactly what they're looking for. They probably had the charts marked off before they even got on the streams. Okay? They do not need me to be here. I'm just here for entertainment purposes because trading by yourself is whack. All right? Maybe an extra confirmation too. Understood? And so everybody here who's a Chartix member or taking the class, they're having a field day right now because they're not stressing over the trade. They know that the market can either come back down to our entry and respect it, or it can blow through the entry and recover. We know exactly what to expect, and so now we can have fun. It really, really is that simple. But if you prefer the struggle, if you prefer the heartache, if you prefer the roller coaster emotions, if you prefer the gambling sort of rush, the adrenaline dump, right? If you prefer losing, then ignore the masterclass. Okay. Carlos Rojas is geeking. Good stuff. Make the best of it. Scalping. Head back to 17,970. Do you run your custom fib numbers? Standard trading view gives. That's a question for the masterclass. But I do use a custom Fibonacci sequence. Most of them are pretty standard. So I still have the 50%, barely use it. And I still have the 61.8, which is one of the standard kind of fib levels, but I use the 61 very differently than what everybody else does. Roy, can the strategy be used on another index or currency pair, or is it specific for NAS? You can use it on any currency pair, any instrument, and most timeframes. If you've taken the class, if you guys wouldn't mind sharing your perspective, if you guys wouldn't mind sharing your perspective in the chat, that'd be great. Give Abdon some insight here. Yeah, I don't think we're gonna get the re-entry at this point. I think there's a very good chance that we just continue. CA members, this is one of the continuation models where we have our pre-session consolidation here. We had a violation of structure and a break back inside. Top to bottom, fib, break above 886, now using it as support. 886 to the extension would be the next trade. Damn it. I'm not a breakout trader, but this would be the trade. Too ugly for me personally. It's 1.2 to 1 R, not for me. But off that wick, this would be the re-entry opportunity and just not attractive. That's why I would need that retest to enter. That's fine. Like I said, I've only taken 6 trades this entire month. You really don't need to take every single trade every day. And could we have showed up 30 minutes earlier and taken the trade? Could we have caught the wick yesterday? Could we have done this and that? I guess. But what's even better is letting the market come to high probability zones and then having a guaranteed win. A guarantee in quotation marks, because as everyone knows, there's no guarantees in trading, but guarantees in quotation marks, meaning like when you know the strategy, you know that that is the optimal place to enter. So that's my version of a guarantee. Okay, it's not the trade is not guaranteed to play out, but it's guaranteed to, when it hits that zone, to either break or bounce, which will indicate to me whether the trade is going to play out. So it's a guaranteed answer. Hope that makes sense. And if it comes back to the entry, we take the trade, assuming we get a good rejection and we see something that indicates buyers stepping in. All right, I'm going to take a look at some news here in just a second, but let's play the TradingView podcast. I'm going to have that playing in the background, and I'll add some commentary or take your questions throughout if you guys have those. Let me see if I can duplicate this. Oh, I'm a genius.
You heard about the prop firm situation that's been happening, these sort of like simulated trading firms?
Yeah. Let me know if you guys can hear the audio.
Yeah, a bunch of
Yeah, yeah. I mean, it's funny because I think that was, when did we talk? We talked maybe a year ago.
I was like 8 months ago. It was back in June.
And then since then, everything has
Completely.
Just for context about what's happening with this video, I have to stop share, dude. There's so many things coming up on my screen. Hold on. Downloads. Okay, beautiful. All right. So podcast, me and Pierce from TradingView, who's the general manager of the entire company, their global divisions. This your boy. Yes, I know exactly what you're all thinking. Number one, the beard is looking incredible. Number two, yes, I'm filling out the suit jacket. You guys can see the biceps, the sleeves on the biceps screaming for their life, fighting for a pure existence right now. Just it looks like I sent the sleeves to the gulags, just fighting for their life. Me and Pierce, incredible convo. Gonna let this one play out. Did we go to a pro studio and get like this whole pro, kind of editing and all this stuff? We did. So I'm excited for this. The audio quality is incredible. So it's going to be an overall great interview. So let me know if you guys can hear and the audio is looking good.
Falling off the cliff. And it was so perfect because that was
my topic, right?
Yep. They
actually shifted in.
So we're gonna have. I'm gonna kind of skip forward to the discussion about the prop firm specifically.
Numbers are up, and I think now, and as a result, you see somebody like a Reddit going public. So we talked a lot about how there are firms out there that are overnight success stories, but you really dig into what are they so fast, and oftentimes there's a lot of cutting corners, if you will. Yeah.
He's saying you're seeing all these prop firms grow and they're growing left and right, and he's like, "Oh, that's awesome." Then you look under the hood and you're like, "Some question marks here on how they're making all this money." Isn't that crazy?
Cutting corners, if you will.
Question marks.
Cutting corners. So we most recently saw this in what's called funded trading programs, and a lot of these challenges, if you will, where people come to the forefront. They basically say, hey, we will, take $100 from you, but then we'll allow you to enter these challenges. Potentially you'll make a bunch of money, potentially you won't, but the downside is, $100. So it's a good trade for an individual investor, right? Their downside's pretty limited, but their upside is essentially, well, maybe I could, start managing money or things like this. So this has been really popular in the future space here in the US, and then internationally. FX and CFDs have taken this very, very seriously. As you say, the turning point really has been around people starting to crack down a little more as to how these companies are funded, ultimately who owns the accounts, and there's a lot of people kind of growing up in the middle of the market, which is not so much the retail customer or the brokerage, but a lot of kind of.
We're going to have that promo code to you guys at the end of the stream, so stick around for another 20 minutes, and I'll have that promo code 30% off for the masterclass to you guys here ASAP.
November of last year, which was like the Funded Next or something like that. There's a couple big firms that.
So he's about to go through kind of the timeline, and the timeline of the prop firms going under one by one. I did have to correct him slightly with kind of giving him the timeline of MFF versus when FTMO left the States, etc. But he gives a pretty good kind of perspective from his side, since he's dealing with the top 50 brokers in the world
that had very substantial brands, kind of grew up overnight, and we saw some takedown actions as well as I think enforcements across the board. So that does signal, I think, to me that there will be more eyes on the space for sure, because these businesses have grown so fast.
Yeah.
But at the same time, honestly, creating competitions in simple terms, there's nothing absolutely wrong with it whatsoever. It just comes down to who are the players that are involved in actually, say, making markets behind the scenes, actually holding the accounts, right? Nobody really dug into that initially, and then turns out oftentimes you were wiring money offshore, and then that was supposed to be like actually kind of a normal thing to do, and in fact oftentimes you'd fund it in crypto, and then so
Guys, funny thing is that when Pierce came to the summit the first year, and he was he was on stage, and he basically said, "Raise your hand if you guys use an onshore broker." No one raised their hand. Raise your hand if you use an offshore broker. The entire room. Think about this is the size of the room at the FX summit. There's a section on the left, the middle section, which kind of gets cut off here, and then there's a whole section on the right. Thousands of people in the room raised their hand for the offshore broker answer, and he was shocked. Because for us, it like we had been convinced by Hugo's Way and Trader's Way and all these fucking Eagle FX and Traders Domain that wiring money offshore and doing it in crypto and using the country code crypto and all this type stuff was normal behavior. When in reality, it was bank fraud, it was wire fraud, it was breaking securities laws for not registering in the United States. So many laws broken just by sending money offshore to another country.
Yeah.
my head starts to like spin a little bit, like, okay, well, I'm pretty used to like connecting my bank account and then just having it be a wire transfer into a normal brokerage. And so I think thankfully people are waking up a little bit, which is generally good for the industry, because I mean, TradingView is a perfect example of a place that wants more education and not more regulation per se, but definitely they want everybody to not get burned by some kind of sketchy broker or something like that. So it's great for the business on our side. We obviously are restricted from working with a lot of these kind of prop trading firms and things like that. And so obviously people come to us every day and want to work with us. But we have to obviously draw a pretty clear line there for sure. Because of course, as you can imagine, it's, again, asymmetric downside. There's a lot of brokers, there's a lot of folks like us that really don't see kind of the risk paying off at the end of the day. It's too much risk. TradingView is a big business to deal with these kind of firms. Sure, there may be short-term money available, right?
So he's saying it's profitable to be in the prop firm game, but this is the same decision that we made at Chart Addicts, which is that we're not going to give up the long-term opportunity to really build something meaningful for the trading space, to chase this short-term money that has a lot of problems behind it, that has a lot of red flags, question marks, questionable business practices behind it. And so I was so happy to hear Pierce kind of echoing the same sentiment, which is that we both made the right decision by purposefully staying out, allowing the space to develop in the sandbox, looking at the regulatory environment, and then seeing what the next best steps are to get involved. And so, shout out to them for doing things the right way and kind of leading from the front.
For sure.
But at what cost, basically. So,
and I think that's the beauty of building something so big like TradingView, is that you're not going to be picking up pennies in the sand. You're not going to be chasing pennies in the sand and giving up the real opportunity, which is building the largest platform and an integrator. Now, one thing that I love about TradingView is the vetting that you guys do for the platforms you allow to partner with you. Yeah. And you spoke about this at the summit, but could you give a quick rundown of if you were to partner with a prop firm, what would you have to see?
Yeah, well, so across the board, we prop firms in general, we can't partner with them from a integration perspective. So it's a simple kind of unfortunate reality. We do still have the ability to license them some of our technology. So if they want to build their own platforms, that's great. We have a ton of tools for them to do that, to plug those technologies in. What I think you're referencing in general is
which, by the way, you're going to start seeing. So clearly there's a lot of independent platforms coming out. There's the trade lockers and all those independent platforms. But TradingView is saying that they're allowing some of the prop firms to integrate TradingView directly on their platforms if they want, not through an official partnership, but just through using their API, sort of like just connecting the backend feed data directly to their website. And it still says TradingView and everything, but they did open those partnerships. So you guys are going to start to see a lot more of that. coming
We
up
have a
soon.
very strict policy around basically KYC and AML for brokerages that we now integrate to TradingView.com.
Yes.
This is something that basically when I joined, I emphasized that we needed to do because TradingView has always been a front end technology.
Chris, kind of. So some of them have started to do it, but some of them have just basically ripped off the technology and just taken off the TradingView logo and just put up their own few little tweaks. But it's still TradingView. So a lot of them just aren't using TradingView directly. If they are, then if it says TradingView watermarked on the bottom, then yeah, it's a direct integration. If not, they probably just took the code, changed a few things, and then, or they're licensing a third-party software from somebody who's selling everybody the same software, you know?
And we do a ton of everything from market data to analytics to news to social. But when it comes to actual trading and investing, we realized, one, this isn't our expertise. Two, if we were to go that route and become a broker dealer ourselves or something like that, it would come at the burden of actually building out an entire compliance team. At the time when I joined, I mean, we were 70 people, right? I mean, even though we're 700 people now, we still don't have the time to set aside another 100 people for compliance, operations, et cetera.
Yep.
And so, but if you think about,
and just to know, this is why a lot of these companies are not registering in the States because of how inefficient it is to register here and how expensive it is. So all the regulatory costs and then having to hire the legal teams and then having a full-time bureaucracy like an HR department or a PR department or a, like a risk management department is so expensive for a company. So all the prices for everything start going up because they're going to pass those costs on to the customers. And that's really why a lot of these guys are choosing to either stay out of financial regulation, like TradingView, or like a lot of the brokers in our space or prop firms in our space, they're registering offshore to try to avoid a lot of those costs. So for the most part, guys, this kind of war, not war, but this kind of battle with regulators is for the best interest of us, the trader. Okay? They're saving us money because you're not going to get a $300 challenge to get a 200K account or a 100K account if it's registered here in the States. Make sense?
About it, the workflow, an average investor, they come to TradingView, they learn a little bit about the markets, they find an interesting thesis or idea that they really care about, they research it, they look at it in the chart, they look at the fundamentals, they look at the news, and then it comes to a moment where they're ultimately going to want to invest. And in that moment, we usually have to pass them to another website, right? Like I have to go to fidelity.com to actually trade.
Right.
And so when I joined, I was basically like, guys, we need to actually integrate these brokers directly to us such that they don't go off-site and then we lose them as customers.
Right? Genius.
And so the whole workflow was to build like a walled garden, but then allow the brokers in such that we could basically complete that entire life cycle on the platform.
Of course, that's so great, and I think that does take like a bit of I want to say an innovative approach to see where the future is going, where partnership and integration versus trying to build a proprietary platform and slowing yourself down to compete in these individual markets where they have the edge because they're spending all day on it.
Oh man.
Totally. So what really is the end goal for TradingView? Is it to be an integration platform for the brokers? Is it the social aspect? Is it the charting technology? Which one of these do you see as being the main driver for TradingView?
Well, I think it's interesting because a lot of brokers or a lot of like technology firms, everybody wants to do one thing really, really, really well. We've kind of adopted an approach now, which is we do one thing really well, but we multiply that across a bunch of different verticals. And so in this case, we have to be the best at charting. That's what we do. That's what we're known for. But now we believe we have to be the best at things like market data, things like real-time analytics, alerting systems, execution.
Oh, wow.
All these verticals in one. And to be honest, I think that few people really think about it from like a comprehensive workflow perspective, kind of what I explained, like the individual steps that take place. And so from that workflow, we believe we need to be the best at all of those different pieces of the workflow. So
like consolidating the process of finding a trade and putting it all in one platform so you don't.
Well, let's see if we can find something else. I'm not going to leak the whole interview on this live stream, but let's see if we can find something else here.
For a long time, we don't really need to weed out, say, the bad eggs or the good eggs, because we can see an average. And
So this is talking about the TradingView's process of how they build their product and really how they've been able to stay ahead of the game. And I was so impressed that their chief technology officer, the person who's responsible for building the backend, spends the majority of his time interacting with the community and just getting their feedback. So he's in Discord chat. The guy was part of the original multi-charts team, which is kind of like the early 2000s precursor to TradingView, one of the earliest charting platforms. And so the fact that this guy's basically a pioneer in the industry, in that technology space, been doing it for over a decade and a half, and still spends his time in Discord interacting with the community, learning more about what customers really want, and then building the product that way, I think is incredible. And that's why I'm, again, every time I talk to the TradingView team, I'm more and more impressed with how they're building their product, and I just have such high hopes for them.
and in this case, you're not optimizing for a couple.
Also, NASDAQ potentially headed down to that 17,660 entry, but we also have 17,700. Okay, so which is, if the market is going to do a pullback of just this recent impulsive move, then we're going to have a higher low entry at 17,690. Personally, that's not the entry for me. I don't necessarily want to be involved in that entry because this is what the trade would look like. Stops still have to be below the lows. Maybe we could get away with a little bit more room here, but it's still a 2-to-1 with a massive, massive stop compared to much more attractive trade. Maybe extend this stop a little bit more. The risk is cut almost in half, but the R&R doubles 4.3 to 1 R. And of course, as we take partial profits, we're not going to capture the full 4 to 1, but maybe we'll end up with a 2 to 1 if we take profits correctly. And if the market obviously makes it to target.
Key customers, but across the board, I mean, our support system, I think we have something like 3,500 tickets a day. So in which case, these are support tickets or request tickets that basically people, hey, this is broken, or hey, fix this, different wavelength, and people are like, yeah, whatever. You wouldn't really know if you just came in the front door, which is tradingview.com. But TradingView actually has about 7 different businesses built around it. Everything from licensing of technology to affiliates, to advertising, to strategic partnership.
Get this, did you guys know TradingView had a streaming platform? He said they're thinking about shutting it down, or they just shut it down or something. I'm like, Pierce, I live stream every morning for the last 3.5 years on TradingView. You're telling me TradingView had a live stream platform and I didn't know about it? That's just poor communication. I told him to open it back up and let me stream on TradingView's platform. And then, because apparently we can stream directly on TradingView and I can stream on YouTube. So I'm like, Pierce, let's run the show. Let's run it back up.
To data integrations to broker integrate, it's insane. And so we really had to like build out a specialist team as well. So now we have like a crack staff of like 1 or 2 experts per business line that that can really speak the local language quite literally in terms of what the product is, but also in a local regional market. That's allowed us to really expand kind of our reach, and something I'm really proud of actually over the last couple of years that we continue to execute on. So, I mean, in total now we have on a global basis about 8,000 partnerships, which is everything from random like tech startup who launched like a Bitcoin mining operation to some of the largest brokerages and exchanges in the world, right? The scale is pretty insane, and yeah, I mean it just comes down to really making it very, very repeatable and off the shelf. But then you have to have that local hand holding expertise as well. Yeah.
This question might be esoteric, but if I could ask you to make a prediction.
Well, gotta save that one for the full podcast. That was a good question.
A mobile application.
You know, it's a good question when the person you're interviewing goes, wow, good question. That's my favorite. When I'm interviewing people, that's where you know, especially when you're interviewing very smart people. Like Pierce is a smart guy, right? He went to an Ivy League school. He's the head of one of the largest trading companies in the world. Smart guy. Same with Bob Elliott. Same with Peter. Same with Dr. Olson. When they hit me with the good question, that's when you know.
To build
That's what I live for.
their models.
We got some advice here for retail traders.
Many of these firms simply disappear, or ultimately
For your competitors to take your market share.
a lot of this industry grew up overnight, but nobody really built themselves like a war chest, such that when regulators do step in, they're ready to actually handle that. And so many of these firms simply disappear, or ultimately, go by the wayside very quickly. So I think that, if a business is really good, if it's making some insane margin, if you're seeing 100x growth, you always got to be cautious with how sustainable it is. And ultimately, folks who grow too fast are for sure targets. Meaning it's just the nature of regulators is always going to be reactive. And the louder the firm, the easier it is for a regulator to react, right?
Y'all heard it.
I call it like rainy day funds is the way to think of it. If you're a
This is
startup
advice
and
to
you
business
actually
owners right
really
here.
do want to build in this space specifically, you should, think about how you can really grow a customer base, but always think about a rainy day fund, because the reality is, regulators will come after you at some point. And so
So keep in mind with all the platforms that come out that have massive growth and they're everywhere, and you're like, okay, well, because they're so big and they're a newer company, but because they're so big, I feel like that's the one I should trust. That's the big lesson I've had to learn, which is the big companies especially are the ones that are targets, right? It might seem like they're the ones who are the most liquid and are going to be able to um yeah, really just stay in business the longest. When they start having the issues with regulators, they have to shut down first. And that's the thing that we learned with my Forex funds and TFT and the rest.
So as long as you're fully buttoned up and the business is actually, operating above board, you'll be ready for that. For others who literally are just managing it in Excel spreadsheets and stuff like that, you've got no chance, right? You're absolutely screwed. So
Was that a dig on Sam Bankman-Fried?
yeah, exactly.
That's awesome.
I mean, exactly. Yeah.
So just to wrap this up, there's most of the audience that's watching this are going to be traders or investors. So based on the trends that you're seeing, is there any advice or any words of caution or anything that you could tell retail traders just in terms of the data you're seeing? Maybe folks are spending the most time watching charts that they're losing the most money on, or so. Is there any interesting data point that you could share that might give some insight to folks?
Sure. I mean, I think if I step back and think about like what's been happening on TradingView from like a data standpoint, where people are spending most of their time, it's interesting that a lot, even in this kind of recent boom cycle that we're in, it's literally.
Oh, it cut out early. Oof. I guess we're gonna have to wait for the full interview to drop. Huh. Interesting stuff. So any big takeaways that you guys that stuck with you guys from that interview? Pretty straightforward stuff. Give me one thing that stuck out to you or one thing that you guys took away from that. Does the code expire? Yes, the code expires in 24 hours. Promo code for the NASDAQ 100 Masterclass link is in the description. Expires in 24 hours. But give me one takeaway from just like the little excerpts that we played from the TradingView podcast. Things that stuck out to you, things that you took away, or just something that you remember from that. TGI Pete. If you're not confident in your strategy, you don't have a clear idea of where to get in, where to get out, take the class. Also, if you want to be a part of a group of serious traders, you get to join. Yeah, you get your first month free to come join the community. So it's a great feeling to chat where everyone's on the same page. Granted, we all have our own opinions, but there's not 50 different pairs and different strategies and opinions saying different things. 100%. We're all different people. We all have different personalities. We all have different standards for ourselves. We all have different character traits, all of that. But when it comes to trading and the act of executing a trade, getting out, trade management, risk strategy, we're all on the same page. And that's what makes it so effective to be in the chart addicts community, for sure. The unregulated brokers never really put 2 cents into thinking about that. What Gabby, are you talking about just the whole act of sending money offshore and all that stuff, or are you talking about how they were involved with prop firms, or what part of it? Shadiness in the industry. We're in the right place here at CA. Thanks, Roy, for keeping us informed straight from the source. That's been the point the whole time, James. It's like, look, I can say it a million times. We can post about it. We can post things online. You can have social media, YouTube videos all day. When it comes time to really get the info, the only people I want to talk to are those who are at the top of the industry, innovators and pioneers, those who are directly involved in building this stuff. And of course, the next interviews that I'll be doing, that we'll be releasing, they're going to be institutional side and regulators. I want to talk to the SEC regulators. I want to see what they think based on all the actions they've taken against some of the prop firms and brokers, which are public. Obviously, it's all public knowledge. And I just want to talk to them to see what their perspective is. All right, so that's going to be the next interview, I believe. Not the next interview we drop, but it's going to be the next sort of phase of interviews that I'm pursuing here. Did anyone here see that the SEC hit Uniswap with a Wells notice? Yes, Josh, I actually tweeted about that. That got me so fucking pissed, bro. Okay, and I'm pretty sure we brought it up. I brought it up on the interview with Pierce too. Okay, the SEC to me is one of the most dangerous. I don't know. I want to figure out how to say this because I don't want to seem like I'm anti-regulation, but they're really the most destructive thing. All right, so we're getting that first retest here on NASDAQ. Again, that's not the entry I'm going to take. I have it marked off because there's a chance that we reject that zone, create support, and then continue to push. But personally, I would like to see a retest back down to 17,600. If it gets here and starts to break through, no entry until we recover. If it comes down to the daily lows and then rejects back above 17,600, I'll enter the tester entry. Make sense? Okay. But yeah, the Uniswap thing, that pissed me off because the SEC hasn't made a clear rule set that the crypto companies can follow. The best example I can use is Coinbase, who followed the rules all the way through, who got listed on the stock exchange, IPO'd, which means that as a publicly listed company, they get audited on all their financial statements. They're audited by every US regulator because now they're integrated in selling securities and everything else. So you could follow the rules all the way through and still get hit with a Wells notice. And so that's why Coinbase sued the SEC because they're like, look, you guys won't make clear rules. We follow everything you say, and then every once in a while you change the rules up, and now we have to, now we have to comply with these random things. Uniswap is the same thing because it's not like these companies are all going to stop developing this technology. They're all just going to go offshore and go create wealth everywhere else. Right? And all it's going to do is stifle innovation. It's going to let shady companies win because they're not beholden to the regulators. They're just offshore doing whatever they want. And that's how we get an FTX situation. Right? FTX US was doing great. FTX Global was involved in too much shadiness, and they brought the US entity down with them. So yeah, Gary Gensler, most destructive thing that have happened to, and the best podcast I've done about this is with Dr. Richard Olson, the founder of Oanda, because right now he's building a no-fee crypto exchange. All right. A no-fee crypto exchange. So he's kind of in the middle of building innovative technology in the blockchain space. And he talked about how, what was the word he used? Cynical, how cynical regulations today are, especially for the startup companies trying to build. He said that they would have never been able to build Oanda if the regulators were acting the way that they are today. And he said, you're not going to be able to build the next Oanda unless you play in sort of a gray area. Otherwise, you're going to get ran over by, regulation. If you're small, then you have to sort of like play around the regular. If you're too big, you have to, if you're small, you have to play around the regulators and just sort of stay under the radar and you're acting shady. If you're too big and you're in the open, then you become a target for regulators. So it's really a lose-lose. Play all.
All right,
No,
welcome
no.
back, ladies and gentlemen, to another episode of the Chart Addicts podcast. We have a very
We got Bob Elliott, Dr. Olson. I think it's in the wrong place. Oh, here it is.
I'm an optimist naturally, so
very much self-centered in the sense, I mean, all my attention is on liquor and trying to make that work. And, you know,
I grew into the regulatory environment that we have today. And
So this is actually going to be a really insightful piece here about regulations and about how, by the way, look at the accuracy here, guys. Look at the accuracy. I'm telling you, if I was a 5-second chart scalper, I'd be milking these for whoever was asking about the 5-second chart earlier. All right, so I'm going to play a little excerpt of this of Dr. Richard Olson, founder Oanda, talking about regulations in the space. This is an interview that we dropped about a month ago. Highly recommend you guys checking this out. I'm asking everybody about the prop firm thing because they've all heard about it. And so you want to get the insight from all the biggest names.
in some cases probably helped build it. You know, we have to credit you for a lot of the innovation in the space. How did we get here? How did the regulatory environment get to the point today, especially as it relates to the US market versus the global market when it comes to Forex trading? And
I mean, first of all, you know, kind of also myself, but some people who are really knowledgeable about the markets, they're very disappointed. Because the debate is held around the wrong issues. And again, you know, kind of, you know, it's very sad to say that in 2008, it was clear that certain things, remedy had to be made. And, you know, small remedies were made, but nothing in comparison to the scale of the problem. So it's like, you know, kind of, you know, someone burns down his house, you know, and then, you know, you come back and then you say, okay, next time I'll give you kind of a few, you know, a little bit of medicine. But more serious introspection and thought would have been necessary. And that we haven't done.
are there a few
So he's basically saying that the regulators, like if you burn down your house, they'll pull up and throw you a Tylenol or two and be like, you know, we fixed it after. It's like they're not dealing with the core problem. They're not really sitting down and thinking about what's happening and dealing with the right issues. They're just sort of playing whack-a-mole with any brand that gets too big and just trying to find a thing or two. And so, yeah, they're solving for all the wrong things.
are there a few obvious things that we got right and a few obvious things that we got wrong and need improvement that come to mind?
You know,
I assume you're talking
Fine,
about
fine.
Basel Accords or Dodd-Frank, things that were supposed to be consumer protections, but instead maybe enabled even shadier activity or didn't really solve the problem.
I mean, the one of the most interesting.
Look at this wick on UJ. Or on, oh my God. DXY does not have a wick. However, the Japanese yen does. All right. This happens very often, like very, very often. If you trade UJ, you'll know. That's why swing trading is so hard. We've heard about this from QB Stu, right? He was floating 140,000 on a trade, and then there was a massive wick very similar to this one that came in and just grabbed all the stop losses that were sitting right below. Like, take a look at this wick here. Take a look at this massive wick here. Take a look at this massive wick. So anybody who had stop losses sitting below this low here or stop profits, so if you had entered and you had put your stops and break even, you got liquidated. Savage behavior. It's going to do like a little retest here and continue pushing to the upside now. Bitcoin, beautiful. 2 days away from the Bitcoin halving, sitting right at the 60,000 floor, which was our target for the Bitcoin halving. Beautifully done. We were sitting at around 71,000. I wanted price to basically come down and keep playing in this range. So Bitcoin playing right on cue. And then I want to see a dip after the halving. And so this is going to be in the next few months. We can track this thing together on the live streams to see if this plays out. Looking for discounted prices on Bitcoin to continue buying. Let's take a look at gold. Oh my God. Guys, we talk about this on the streams every day. We track these pairs and their movement every day. Not only did we get the beautiful break and retest on gold, if anybody was paying attention on Friday, Sunday, Monday, and then we're getting that break and retest. Now, do not buy this. Wait for the liquidity grab through, so around 23.50. Okay, and then it'll be ready for longs straight to 24.30. All right. Anytime that you see too clean of a support getting built for gold, if it's a genuine breakout, you're going to have the liquidity grab first. So you have the support getting built here, look for the liquidity grab first, and then that continuation. Gold tracking perfectly. Can't see your screen. Guys, can you guys see my screen? No, everybody can see my screen. We're good.
When you go to a doctor is that everyone is so confident that the medicine which you're getting is the right medicine, and it's actually the wrong medicine. And that is the biggest danger. I mean, today, the real serious issues are not being discussed. It's just outside. I mean,
I just want to get clear on this, which is, what do you believe the serious issues are that we need to open the conversation about?
First of all, I've done a lot of
Yeah, I ain't asking no softball questions. We get into the bottom of it.
Analyzing data, statistics. Right, depending on how you measure, 2008 was a $14 trillion. It recovered thanks to kind of all this quantitative easing, etc., and we went there. But the damage, and at this time you had something like 70 trillion kind of global GDP. So we burned like 20% of GDP, just to give you a kind of thing. Now, what has happened? Yes, there was this Basel thing, making things even more complicated. Dodd-Frank thing separated it. And then also, what has happened is that regulators today, when you meet them, they have a legal text. And, kind of whenever you get something to read, it's the question, at what distance do you read it? Do you read it kind of word by word or letter by letter? Or do you keep it a little distance to really understand what's going? And regulators today read it like that. So it's super short-sighted.
And what effect has that had? First, let's talk about the Forex industry as you've seen it evolve. And then let's also talk about, more importantly, the crypto industry, which I believe has been regulated to the point of stagnation in terms of innovation, because nobody wants to put themselves out there. People see, especially in the States, cryptocurrency projects see what happened to Ripple. And they're like, well, if I become very successful and I provide a technology that's low latency, highly scalable, global, and competes with the current SWIFT payment system, I'm going to end up in a lawsuit with the SEC for 5 years. And so let's talk about, how do you feel regulation has stifled innovation in Forex? And let's also talk about the crypto space.
So, it definitely has stifled Forex and, kind of has taken a lot of momentum out, innovation which existed for a while, kind of the banks.
To the person who's asking why I'm not trading gold even though I'm accurate, is because accuracy of analysis does not mean profitability as a trader. Being an analyst is... So I used to trade gold for a long time, and when I went through my data, I realized that I was chasing these big wins on gold to the point where it was hurting my progress trading indices. I was making good money, and I'd give more than half of it back or more. I'd give all of it back trading gold. And the second that I stopped trading gold, I became wildly profitable. And then from there, I refined my index trading. So I stopped shorting and only started going long, and my profitability went up again. I stopped trading certain days, like Sundays, my profitability went up again. I stopped trading after certain times and between certain times. So like between 12 p.m. and 1:30, I don't trade, or certain things I did, profitability went up again. And so it's not that I can't make money, or that now in my experience, I can't go in and take these trades. I've been only moving in one direction, which is getting more profitable while taking less risk. And so that's why I'm not going to go back to trading gold, because I'm headed in the right direction. I could make more money, but at what cost? Right? Maybe now I'm distracted. I'm in a gold trade. The gold trade loses, but the NAS trade wins. And now I'm sitting there thinking, I could have just traded the NASDAQ and not gave my money back. Make sense? Look at the data.
There's so many other problems. They just cannot.
US30 very likely to break the lows. There might be a scalp here for the folks who are looking for that re-entry opportunity, but I don't know, sellers are looking pretty aggressive. There's a good chance that we break the lows. So just be mindful of that. Either protect the trade accordingly or use this as a scalp opportunity.
Have the kind of intellectual kind of bandwidth to really dive in and do it. I know some of the people quite well. It's just, they don't have the time.
And to anybody who was asking if the strategy works on other pairs, this is the daily on Euro JPY. Same strategy. Insanity. We called this thing out, I'm pretty sure, early December. Somebody on the live streams had asked to cover this trade. It could have been on either of these streams. I'm not going to go and find it, but I'll have to go back and find all of these calls. Back to NASDAQ.
Too many other pressing issues, even though, you could make lots of money, but it just, they don't have the energy.
This actually goes to the example you used about the doctor. And the reason that people trust that the medicine they're getting is the right one is because of the credibility of the doctor. And I think the reason that people assume that the financial system is the way it is because the credible sources, let's say the banks or whoever the influential figures are telling them this is the way it needs to be, right?
Exactly, but the serious issue is in this real-time environment which we're in. I mean, when things go a little wacky and out of things, you'll have real-time reporting and people will look very pale. And that is not a good message.
Could you elaborate?
I mean, you saw it in 2008. I mean, the people trying to actually salvage the situation, they were scrambling day and night to keep it going. But the problem is since the world has, become much more complex, all the political issues which are happening. I mean, global warming, it had the degree of complexity and threats have significantly been upped. So how do you then want to get an easy way out? I mean, it's super challenging for the guys.
God, we had such a fascinating. What was it about? Oh, it was you were explaining the concept to me. This is on the previous podcast we did. This is a year and a half ago. The static systems versus dynamic systems, and talking about how people see, or some economists used to view markets as a hard science, versus seeing it closer to something like a geoscience, which is more dynamic. And so, is that what makes? I'm trying to find a way to explain this. Is it because the industry is evolving so fast, it's hard to make regulations that fit? Like you were explaining how there's no contingency plan for a 2008 situation, like a black swan event.
Yes.
Is it possible to build contingency plans around a dynamic system like this?
I mean, first of all, modern science, the computer, think of electrons, super dynamic objects, but we need hard work has to be done. I mean, we need the best minds of the world. They have to zoom in and build the tools. And that hasn't happened. But the time is not right. I mean, it is not, kind of, the spark is not ready to jump. So the time couldn't be more perfect. So first of all, kind of including the work which our team have been doing, we're pretty far along. Things are much better understood, that kind of market environment, because also you have digital markets, execution can be quite rapid. It's the time to strike.
What are you hopeful about in terms of the evolution of
trading technology and investing technology from the eyes of a consumer? Like if I, as a trader or as an investor, what should I be excited about in the future?
I mean, kind of, first of all, I have to make a big disclaimer. I hate to talk about things which are not here today. I mean, that I find is a disaster, because you say, why don't you deliver it tomorrow? But at the same time, we're kind of, it's good to think a little out of the box. Now, remember, airplanes didn't have radar. Wouldn't it be great that every trader has his radar, a really quality decision support tool, and really, tells him, oops, a yellow light comes out, oh, have you put on your seatbelts? You forgot your stop loss? Oh, please put it in. And have all those tools which make sure that he can go, home in the evening. He understands his risk. His wife will not get angry because he has first made a ton of money and then lost everything. So, we're normal people. So we want to make it safe for the person. And that.
All right. So that's going to be about it for today's stream. A lot of insightful information from Dr. Richard Olson and Piers Crosby from TradingView. Obviously, both at the top of their game and the top of the industry that they're both playing in. So very excited for that. I'm very excited to drop all 3 podcasts. We have an interview with Peter Tuchman dropping soon. We went back to the New York Stock Exchange for a second interview, so excited about that one. Full interview with Piers should be dropping in the next few days. Keep an eye out for that. Make sure you guys have your notifications turned on. Hit the like and subscribe if you haven't already. And then we have an interview with macroeconomist Bob Elliott, one of the top economists in the world today, talking to us about where the economy is going. I asked him straight up, is gold going up or down? Right? He said yes. Okay, so find out more on the podcast as they drop. Next 3-4 weeks are going to be wild. And then, of course, World Tour starts early May. We're aiming for May 5th. The tour dates are Dublin, Liverpool, Manchester, London, Lisbon, Portugal, Madrid, Spain, Barcelona, Spain. We're looking to add Lebanon to the tour. That's me selfishly, but obviously there's been some escalations in the area, so we might have to skip Lebanon on the tour and then go to Dubai for a small event mid-May. Go ahead and show face. Get the Emirati community out there kind of on the same page. Let them know that we're coming and really get things moving. So we hope to see you guys on that tour. If there's any countries that we missed, you feel like we could get a couple hundred people to show up to a free seminar event with other traders and other kind of important figures in the financial space, let us know. Send us an email, shoot us a DM, drop a comment. Last but not least, promo code 25% C825 is the promo code, valid for 24 hours. The NAS100 Masterclass link is in the description if you guys want to change your trading, get your trajectory in the right direction, stop gambling, figure out exactly how to build a schedule, the exact entry and exit strategy that you need to be using to make your life a lot easier, stop stressing on the charts, and trade how we trade every morning on these live streams. Because I'm still waiting for this move to happen. It'll probably happen in 2-3 hours. Late does not mean it's not coming. I'm going to throw my alert up right here. But if this is something that you're looking for, go ahead and use the promo code. If you want more information, tomorrow we're doing a free webinar at 8 p.m., kind of an information session on NASDAQ and how we traded and why the class is going to be beneficial. Show up to that if you're not sure and get more information, ask good questions. If you have any comments, questions, concerns, drop a comment in the description below. Take it easy. Happy and safe trading. Peace.